This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on July 20th, 2017. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. Radio show runs every Sunday afternoon, 3 o'clock on 630 CHED. If you ever miss a radio show, they're archived on Harold's website, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You will find us there. Second half of the show, we'll talk about rare-colored diamonds. This week, diamond is a .24 carat, round, brilliant cut, fancy, vivid yellow green. .24 carat, round, brilliant cut, fancy, vivid yellow green. See it at the featured diamond, rarecoloreddiamonds.com. It is a beauty. We'll talk about diamonds in about 30 minutes' time. To start the show, and you can get our free weekly newsletter from Harold. It's the companion to the radio show. You can be on the same page we are, seeing the material that we're reading on a weekly basis. If you'd like to get it, speak with Harold, 1-800-432-1022, rarecoloreddiamonds.com. We'll be happy to email it out to you free of charge every week. Jim Rickards came out and said it's time for investors to go into a defensive crouch by selling stocks and reallocating assets to cash, treasury notes, gold, and gold mining shares, in particular gold. Gold will be the big winner when the Fed suddenly realizes its blunder, and he's talking about raising rates, and has to pivot quickly to ease, bring down rates, or do quantitative easing, probably by late summer. He has the belief that the economy is not that strong. The time to position in gold is right now, according to Jim Rickards. And it was interesting to note, this is from the Daily Mail out of the UK. Gold is one of the most unusual investments that anyone can make. It does not pay a dividend, it does not produce earnings, and it does not make promises about growth prospects like most firms do. But it does deliver returns, outperforming property and the FTSE 100 index over the past 10 years. Now, this is in the UK. If somebody had put away 1,000 British pounds into the FTSE in 2007, for example, it would be worth 1,640 British pounds today. Well, the same amount invested in 20-year gilts would be worth about 1,350 British pounds, or 1,190 if the cash had been plowed into UK property. An equal investment in gold would be worth more than 2,300 British pounds. So there you go. Obviously, it's always worth having an allocation of hard assets, gold and diamonds in your portfolio as a protector, as an insurance policy. Profit and protect in your portfolio. And Harold, that's some interesting news from Jim Rickards coming out and saying that he's concerned about the financial markets, and now's the time to take a look at dipping your toe into developing a position in gold.
Well, I agree with him 100% at this point here because, again, you just don't know what you're going to wake up to in these markets. There's so much trouble out there, and there's so much uncertainty. And let's face it, in the first 6 months of his presidency, Trump has done absolutely nothing, which is reflected in the currency market at this point. So, yes, I'm in a full agreement that at any time these markets could go extremely volatile. You're talking that a lot of top experts are saying that the stock market is way too top-heavy and are very concerned about staying, much longer in the stock market at this point. In fact, a lot of the smart money is sitting on the sidelines at this point. When you see the Dow hitting the levels that it hit, and it's confusing because, again, the economies all around the world are in poor shape, even in the United States. But the fact is that the United States was still doing better than most other countries, and their currency reflected it, and the stock market reflected it. But the fact is that there is still a lot of problems in the U.S., and I am a firm believer that you need to have protection in the market at this point, because any morning we could wake up and find the markets, doing things that we didn't expect. The first thing that we do anticipate is that the first market to fall will be the Dow. We think that there's a big correction coming in the Dow. There's no way in the world that the economy is strong. The retail market in the United States is plummeting. As a result of Amazon, for example, there are so many stores and retail stores that are closing. It's extremely concerning. In fact, major chains are closing down almost all of their stores. So the fact is that anything can happen in this market. We've got the derivatives market that is so dangerous. It's in the quadrillions of dollars, and it's unregulated, and that was partially the reason for the fall in the markets in 2008. So again, you need to have a balanced portfolio. If you are going to trade stocks, which I'm not a firm believer in, paper assets at this point are just not on my radar, because the fact is they're easily manipulated. We don't want to be in those type of markets. We want to be in alternative assets, assets that you could hold in your hand, assets that have substance to it, like gold. Now, gold has had a huge week this week. Last week we were down to about 12.15 in the gold market, and this week we came back up. We're trading right now at almost 12.50. So we've seen about a $35 increase in the price of gold this week. A lot of that is to do with the fact that people are starting to get nervous. And when they start to get nervous, they go into a protection mode, and gold is probably one of the best investments you could make when other markets are going south. So we're a firm believer in gold. We always have been. Gold's been in a hiatus for the last 4 years from 2011, when it hit its all-time high of $1,920. The market has been down from that point. Now, it's important to understand that gold didn't drop to that level on its own. Gold dropped to that level from $1,920 down to $1,050, primarily because it was forced down there. The margin requirements were raised 5 times in a week, and the exchanges made it very expensive to trade gold, and most of the speculators sold out because they couldn't afford the margin. That was done by the regulators and the government back in 2011, and gold has been trading in a range since that point. But again, nothing has really changed that much in the U.S. markets and in the Canadian markets and in the world markets as far as bullishness goes. So the fact is that we could be coming to a point at this time where gold's ready to make another move. In actual fact, we do offer a gold program to our clients. It's not for everybody because it's for larger amounts of gold, but the fact is that we do sell kilos of 99.9% gold, the most beautiful bars you've ever seen. The fact is that we sell them at bid price. So when you're buying any commodity like gold or silver or whatever, there's a bid and an ask. You buy at the ask, sell at the bid. That's the way it's always been and probably always will be. So the fact is that there's a spread between the bid and the ask price, and that's how the dealers make their money. We don't charge that spread. We let our clients buy at the bid and sell at the bid, so there's no spread whatsoever, and we take no monies from our clients as far as commissions. So when you buy gold through us, if you buy gold at $1,250, at $1,250.01, you're in profits. So we do have an amazing gold program. It's a physical program that you can either take delivery of, or we can store for you at a Brinks or a Malka Mint, and we can also trade the gold for you for no commissions also. It's about time that we started looking at gold again. We had about a $35 increase in the price of gold this week, and the fact is that gold seems to be holding its support very strong. On top of that, there's also a war premium, I believe, built into the gold market, which is about $200 at this point, and it's there because of President Trump and what he's saying towards North Korea. The markets have been quiet about that over the last few weeks, but I do not believe that situation is going to go away. So we do have to be very concerned. And again, we want to get gold as close to the bottom as we possibly can, because again, with our program with no commissions and no spread, a $10 move in that market will make you money. So we're very excited about the opportunity to offer kilos of gold in our new program, and that is available today for all of our Canadian listeners. The other situation that's going on right now is extremely confusing. The Canadian government raised their interest rates last week by 0.25%. Now, the fact is that when they first came out and said that they were going to do that, I know Randy and I were shaking our heads and saying, why in the world is the Canadian government raising the interest rates by 0.25 point? Because we had just read a major report that said that at this particular time in history, the Canadians are so heavy in debt. I guess that's because of low interest rates, but it's the heaviest time for Canadian debt in history. Then on top of that, the Canadian government did impose those taxes on Canadian real estate in Toronto and in Vancouver, and it caused the real estate markets to plummet. So all the people that were speculating in real estate all of a sudden saw the market drop by 30% in 1 month. In fact, that happened 2 months in a row. That's something that we warned everybody about, because real estate doesn't trade that way. And when you start to see real estate going up that much, you know there's a bubble, and you know that there's going to be a fallout. But the fact is that now that interest rates are going up and real estate prices are crashing down, all of a sudden your mortgage is going to cost you more money. And if Canadians are in heavier debt than they've ever been before, why did we raise interest rates? In order to make that debt even more expensive for the consumer. So by raising interest rates, I don't see what benefit that was in any way, shape, or form, because Canada wants a weaker dollar policy because it makes our exports that much more appealing to foreigners. On top of that, by raising interest rates, you're killing the real estate market, adding more to mortgages every single month, and adding more to credit card debt and bank debt that people have taken out loans for. So what was the purpose when it doesn't help the Canadian economy an iota? So again, that was a head-scratcher. I still don't understand why in the world they did that, but it certainly doesn't benefit the Canadian consumer in any way, shape, or form. So again, Randy, at this point, the markets are confusing for most people. I see, if I saw a huge correction coming, it would be in the stock markets at this particular point. That could happen in September, and it could happen going into the latter part of the year. In the meantime, if the stock market sells off, watch for gold to take off. So if this is going to happen, we should have some gold in our portfolio at this time. And again, if you're interested in the gold market, I can help you. The problem is at this point it's for only larger investors, because again, at this point we can only sell kilos of physical gold. But when you see these bars, you've never seen anything more beautiful in your life. They're absolutely spectacular. So again, Randy, at this point, there is a lot of volatility in the market, a lot of confusion, but the markets really aren't going in any one direction. But we believe that is going to change in the very near future. And again, we do need to look at what's happening in the precious metals markets at this point for safety when these other markets do start to sell off, and that could be almost at any time.
In our free weekly newsletter, Sprott Asset Management sees next gold bull market driven by a stock correction. Also, Clive Mound, precious metal sector, the biggest opportunity since late 2015, and the last chance at these prices. If you would like to read those reports, we'll be happy to send them out to you. We have our free weekly newsletter, the companion to the radio show. You can go through it in 5 minutes, or you can literally spend hours if you want. You'll be completely up to date in 5 to 10 minutes. Read it on any device. All you need to do is get it from Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. Coming up in the second half of the show, we'll talk about Rare Colored Diamonds. Our featured diamond of the week is a .24 carat round, brilliant cut, fancy, vivid yellow green. And the color on this is absolutely gorgeous. Take a look at it. rarecoloreddiamonds.com, featured diamond of the week. Interesting to note some of the top stories in the world financially this week. In the United States, they have a new U.S. subprime boom. Same old sins, auto defaults are soaring. We know about what happened back in 2007 with the financial crisis. It was the housing market. Well, this time it's the vehicle market. It's classic subprime, hasty loans, rapid defaults, and at times outright fraud. Only this time it isn't the housing market, it's the U.S. auto market. A decade after the mortgage debacle, the financial industry has embraced another type of subprime debt, auto loans. And, like last time, the risks are spreading as they bundle into securities for investors worldwide. So here we go again. They're bundling them into securities, and people are buying them. Unbelievable. Subprime car loans have been around for ages, and no one is suggesting they'll unleash the next crises, but since the Great Recession, business has exploded. In 2009, $2.5 billion of new subprime auto bonds were sold. In 2016, $26 billion were, topping average pre-crisis levels, according to Wells Fargo and Company. So there you go. If you think things have changed on Wall Street, the banking industry in the United States, prime example, not the housing market, but they've moved into the auto market and creating another mess. We've talked about being aware of what's happening in Toronto and Vancouver when it comes to the real estate market. Toronto home sales plummeted to a 7-year low. Canada's hottest housing market is definitely cooling down. Total home sales in Greater Toronto dropped to 5,977 in June, the lowest since 2010, and down 15% from the prior month, according to data from the Canadian Real Estate Association. Average prices were down 14.2% since March, the fastest 3-month decline in the history of data, back to 1988. Well, the ratio of sales to new listings sits at its new low level since 2009. Now, the June data comes after a series of measures by policymakers to tighten access to the market, and before the Bank of Canada hiked its interest rates, as Harold touched on last week. The first increase since 2010 that will further pinch mortgage eligibility. But yes, pretty much throughout some of the hot spots of Ontario, Hamilton, Burlington, Kitchener-Waterloo, they're seeing quite a pullback in real estate in the Ontario market. Also, the average Canadian house worth $504,458 in June, down 10% since April. Sales and prices have both declined since peaking earlier this spring. Home sales fell in June to their largest amount in 7 years, as we touched on. And it's interesting to note that, as an example, if you were to strip out Vancouver and Toronto, the average Canadian home is actually priced at $394,660 in June. A year ago, the figure stood at $374,760, which means when you factor in Toronto, excluding Toronto, you're getting an increase of about 5% over the past 12 months. Goldman Sachs coming out and writing an article. There's one big difference between the Canadian crazy housing market and the United States in 2007. And they say that, yes, the Canadian housing market has been red hot on a national level. Home prices up 14.22% versus a year ago, and 76% since the world began to emerge from the global financial crisis in March of 2009, according to Terranet National Bank House Price Index. And obviously, some markets, there were bigger increases, but they go on to write in this article, and you can read it in our free weekly newsletter, that they don't think what happened in the United States will happen here based on how mortgages are structured, and as well how we pay off our mortgages in Canada. Totally agree. I think that we won't have an American-style meltdown, but at some point you're going to see people stuck with real estate that is definitely underwater, and that, Harold, will be a major, major concern as we go forward. If you buy something for $1 million, it's down 10, 20%, maybe 30%, and you had a mortgage on it, you're down a substantial amount of money. And either at some point people walk away from these scenarios, or they bite the bullet and just have to ride it out. But that's why you don't want to buy high and sell low. It's buy low and sell high. And lately, as we had that one quote from an earlier show, a lot of people have been buying high and crossing their fingers, and now is not a time to do that. If a market is definitely overvalued, such as the housing markets in Toronto and Vancouver, stay clear. wait for things to settle down. One of the great things about the gold market, Harold, very, very undervalued at this point. That's one of the reasons that we recommend hard assets. They're very undervalued in relation to stocks and bonds and real estate. So that's why we say take a look at hard assets.
You better believe it, Randy. Again, that is so concerning, the real estate market, because almost everybody has most of their net worth in their home. And most people do not speculate with their home. But because speculation was so rampant in Vancouver and Toronto, it's affected everybody's home prices. So yes, you're 100% correct. If you are a recent buyer in the last few months or even last year in Toronto, for example, and bought a home with a minimum amount of money down, and now that money is property is dropped by 30%, you're in a margin call. The bank can literally phone you up and say, you do not have enough equity, the value of your home has dropped so substantially that you must come up with more money. And that's what happened in the U.S. back in 2008, 9, and 10 type of thing, and that's what could happen in Canada, primarily because of the speculation that's going on in the real estate market. You never speculate with your home. That's a foolish thing to do. And most people would never, ever do that. The unfortunate thing is that people are sitting there in their homes or properties, and this is being done to them. They have no control, and it's difficult to sell a home. Let's face it, you can't just up and, because you feel that the market is going to fall, sell a home in a week or two. It's just not going to happen. By the time the deal closes, the deal's going to go south because the market has dropped so much. So the fact is, we don't want to be in those markets. You never, ever want to put yourself in a position where you could lose your home or your major asset. The fact is that there's so few investments available that are safe today that can give you any type of return. Most people are concerned that they'll never ever be able to retire. In fact, most people believe that, by owning a home and paying it off and doing the right thing, when you get to retirement age, that's when you can sell the home, make a bundle of money, and take that money and downsize your livelihood, and that's how you're going to retire. But when things are happening in the market that you have absolutely no control of, like in the real estate market, it really can put a damper on your financial situation and your plans moving forward. We have private investments. We don't deal in stocks and paper and any type of assets like that. All of our assets are hard assets, and we have programs, private investments, that allows our Canadian clients to invest with us as partners. Our clients are making over 25% a year in U.S. dollars on private deals that we do almost on a daily basis. So, again, if you're concerned about your future and you're not making the type of money that you should be making, please get in touch with me. Let me explain to you how you can use your present assets and how we can get into private investments with my firm that could make you whole, that can get you in a situation to where you could actually look to retire one day, because some of our programs give you a monthly income. So, again, it's very difficult out there right now. It's very risky. You don't know which way to turn, and if you're in that scenario, please give me a call. I'll spend as much time with you as you need and try to direct you in the right way. But we do have private investments that return over 25% a year and that do pay you monthly. That is something that a lot of our clients have done extremely well with for the last 5 or 6 years.
1-800-432-1022, the website rarecoloreddiamonds.com. Going to come back and talk about diamonds. As the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping on July 20th, 2017. Our time is 9:10 Mountain. If you would like to speak personally and privately with Harold about the different programs that he has in place where you can start making money right now today, connect with him, 1-800-432-1022, the website rarecoloreddiamonds.com. We'll talk about the ongoing auction that Harold has through hsfineauctions.com here momentarily. Our featured diamond of the week is a .24 carat round, brilliant cut, fancy, vivid yellow-green. This is a beautiful, beautiful color on this diamond. One of the nicest colors I've ever seen when it comes to Vivid yellow green. What a beauty. See it at rarecoloreddiamonds.com. Featured Diamond of the Week. And Harold, tell us a little bit about this diamond.
Well, the diamond is outstanding. I mean, you can just tell by the color it's extremely rare. It's not a large diamond. It's a quarter of a carat. But the thing that makes this diamond so extremely rare is, number one, the cut of it. It's a round brilliant. Very seldom will you see a diamond like this cut in a round brilliant, and only if it's going to be a very special diamond will a cutter cut a round brilliant diamond. Otherwise, an oval is easier to cut, and a cushion cut. But this is just a magnificent round brilliant quarter carat. Now, the color is vivid yellow green. So what's unusual about this is, number one, is that being that it's vivid, it's the highest color grade given by GIA, the Gemological Institute of America, so the saturation of the diamond is extremely strong. But it's not yellowish green or greenish yellow. It's two primary strong colors of yellow and green. So that's why you get this magnificent combination of green and yellow. You can see it in the diamond. It's extremely rare. Very seldom will you ever see a diamond this color, especially being vivid. So it's one of my favorite diamonds. It's not a huge diamond, but the fact is it's extremely impressive, extremely valuable, and a great investment that will over time do extremely well. Now, diamonds are longer-term investments. You don't buy diamonds for short-term and then sell them. You know, the fact is that most of the time a diamond will stay in a family, for generations. We've talked about it on many occasions where diamonds have just gone up to prices that are almost unbelievable over a longer period of time. As an example, the Shirley Temple diamond, it was bought in 1940, so it's 76 years old. Stayed in the family for that period of time, but it went from $7,100 when it was purchased to $25 million. So the fact is that people buy diamonds for safety, also for portable private wealth, and for an asset that doesn't decline in value but holds its value and over time, can do extremely well. In fact, many diamonds go up by 15 to 20% a year. Now, the thing is about diamonds is that they're a longer-term investment, and they're primarily their value is determined by auction. So the fact is that when a diamond goes to auction, that will determine, in actual fact, what the value of that diamond is. We have two actual auction sites. Not only do we sell diamonds for investment purposes, but we also created a secondary market to resell our diamonds. One of our diamond sites is a live auction. There's not another diamond auction site like it. Very proud of it. It's done extremely well over the years. But we've also built a new auction that has taken us over the last year to build. And this is not a live auction in the sense that I come on and sell every piece within an hour. This is an auction that will actually evolve over a month or two. And on this particular auction, we've got some amazing pieces. We've got Elizabeth Taylor's brooch. Now, Elizabeth Taylor's pieces sell for absolute fortunes at auction. I remember back a few years ago, one of her pair of earrings came up for sale. It was estimated it would sell in the $75,000 to $80,000 range, and it sold for $800,000, 10 times what the experts at Christie's, I believe it was, thought that would sell for. She also had a necklace that they thought would sell in the $80,000 to $100,000 range, and it sold for close to $1 million. So Elizabeth Taylor's pieces tend to sell for more in resale than almost any other piece. So we're extremely excited to have Elizabeth Taylor's piece on the website. Now, the auction actually started just about a week ago. In the first 3 or 4 days, 2 items that were ready to expire both sold, both kilo coins. One was a Libertad and one was the Aztec calendar. Both were kilos of pure silver, absolutely amazing collectible coins that each weigh 2.2 pounds each, beautifully displayed. Both sold in that week, and we will be replacing them with other magnificent pieces this week coming. We have some beautiful diamonds up. Some clients put some beautiful yellow and pink diamonds up on the site. In actual fact, even though we have Elizabeth Taylor's piece on the site, there's one particular diamond that actually blows that piece away. And it's just over 2 carats, but it's an Asher cut, vivid yellow flawless diamond. You've never seen a yellow diamond that compares to this one. It's the best color. It's a 10 out of 10 in color. It's vivid, so it's got the highest saturation. And it's the most amazing cut because it's a step cut or an Asher cut, which is my favorite, which is a square emerald cut, and it's internally flawless. It's not an inexpensive diamond. It's one of the rarest yellow diamonds you'll ever see. It's valued at about $400,000, and the opening bid on that diamond is $200,000. Somebody could literally steal that diamond for just over $200,000 and have one of the finest and most amazing yellow diamonds that I've ever seen in my entire career. So the auction, again, we anticipate that it will continue to do well. It's a brand new concept for us, so we need to continue to tweak it and improve it, but we're very pleased with the results so far, and two lucky buyers walked away with 2 kilo silver coins, the Libertad, which I know is Randy's favorite of all, and one of mine, and the Aztec calendar, both major silver coins that expired this week, and both were purchased at very, very good prices. So please go to H. Siegel Fine Auctions, look at our catalog, sign up for it, and there are some amazing pieces. Now, this particular auction is going to be ongoing. As pieces expire, either sell or don't sell, they will be replaced with other pieces. So we're not going to take this site down. We're going to continue to run these auctions at least throughout the end of the year. And then we'll start to also incorporate live auctions too. So we're advertising this very heavily all over the world through different media sources, spending a lot of money to advertise it, and we do anticipate that it is going to continue to do extremely well. So, Randy, we're very, very pleased with the initial results of the auction, but as more and more time elapses and we can advertise more, we do believe it'll do even better.
Connect with Harold at rarecoloreddiamonds.com. Learn more about the auction, and as well, go take a look at our featured diamond of the week. It's a beauty, a .24 carat, round, brilliant cut, fancy, vivid yellow-green. One of the nicest diamonds I have ever seen from a color perspective. rarecoloreddiamonds.com, featured diamond of the week. As promised, we continue going through auction results from the first 6 months of the year. And we pick it up, Sotheby's Magnificent Jewels and Noble Jewels, May 16, 2017, Geneva, Switzerland. And we should note, when it comes to the auction results, obviously each diamond is individual. And what your diamond may be worth and what these diamonds go for, it really would depend on many, many different things. But these are an example of the potential of the diamond market. And Sotheby's, Christie's, they have auctions in New York City, London, Hong Kong, and Geneva. Harold obviously has auctions through hsfineauctions.com. And it really comes down to the time of the year, where it's being done, currency, your diamond, somebody out there wanting that diamond. Many other factors are obviously playing into the results. But the results were very, very good for this auction. In fact, the world's most expensive earrings brought in $57.4 million. A mismatched pair of fancy colored diamond earrings sold for $57.4 million. A world record for earrings sold at auction. Sold separately, they were the top 2 lots. And they were named Apollo and Artemis, after the twin brother and sister, who are among the most widely venerated of the ancient Greeks deities. Sotheby's said that they are the world's most valuable pair of earrings to be offered at auction. They did go to the same buyer. At first, they were unsure if that was the case. It was confirmed later that, yes, they did go to the same buyer, but that was a big, big auction in Geneva, Switzerland, with those 2 diamonds going for that price. Now, here are some of the other lots. Lot 121, a fancy vivid yellow diamond and diamond ring. And the vivid yellow diamond was 2.27 carats. The estimate on it, $48,000. It went for $87,970. Lot 84, fancy vivid yellow diamond ring from De Beers. Set with a cut cornered square modified brilliant cut fancy vivid yellow diamond weighing about 3.48 carats. The estimate on it, $52,000. The lot sold for $113,104 US. Lot 374B, a fancy yellow diamond ring set with a pear-shaped fancy yellow diamond weighing approximately 6.34 carats. The estimate on it was $42,000. It went for $87,970. Lot 364, an attractive fancy pink diamond ring set with a cushion-shaped fancy pink diamond weighing about 21.11 carats. And the estimate on it, $3 million, went for $5.4 million. And we will be happy to send these auction results to you. You can go and take a look at them. You can click the link. It will take you directly to Sotheby's. You can see the diamond. You can see the write-up on it. You can also see the price that it went for and the estimates. It's all verifiable on Christie's and Sotheby's websites. You can see it for yourself. Lot 363A, an important fancy vivid blue diamond ring, set with a step-cut diamond weighing 3.32 carats between triangular diamond shoulders, and the estimate on that was $6 million. It went for $6.7 million. But the two big stars of the show were the diamond earrings, Apollo and Artemis, that sold for $57.4 million. And Harold, that obviously was a record for earrings, and the person who picked up both of them obviously has a collector's piece, a museum piece, that somewhere down the line in 10, 20, 30, 40 years, maybe his family brings out, and they could be worth, who knows what they could be worth at that point. But it was exciting to see in Geneva that auction earlier in the year for those diamond earrings. They were stunningly beautiful, the pink and the blue, and you can actually Google them and take a look for the pictures. Beautiful, beautiful diamonds. And Harold, that's one of the exciting parts about investing in diamonds. You can wear them, and you can take them out. And sure, you may want to have a security guard with you if you're wearing $58 million diamond earrings. But my goodness, you're going to be making a statement when you walk into that room, because they sure are beautiful.
Oh, my God, are they ever, Randy? They are so stunning. I do suggest everybody that's listening to the show does Google those and see those diamonds. They are beyond anything that you can imagine. But the reason for bringing up at times, these type of diamonds, obviously 99% of the people in the world could never afford to buy $60 million diamonds. The reason that we bring them up is, number one, because it's of tremendous interest. Number two, it's in the diamond industry, which we're in, and it gives you an indication of how the extremely wealthy spend their money. Now, they didn't buy these diamonds just for jewelry. Believe me, you don't spend $58 or $60 million just on aesthetics type of thing. This is an investment. They're going to keep it in the family. It'll be handed down from generation to generation, and as any asset, they will go up in value until somebody in the family decides to sell them. But the beauty and the reason that we bring these auction results to you is so you could live vicariously through these extremely wealthy people that are able to buy these magnificent diamonds. But not all diamonds sell for $40, $50, $60 million. If you look at the same auction results, there's many diamonds that have sold for $50,000, $100,000, $200,000, and have all done well, and many have sold over the estimates, and that's why we bring these auction results to you. So, again, it's very exciting. It's amazing to be able to see some of these diamonds up front, and again, they're great investments over the longer term. Now, we deal not only in rough and cut diamonds, but we also deal in uncut diamonds. So, through my partners, they've been miners of diamonds for 4 generations now. So many of the diamonds that we actually get are just out of the mine, and they haven't been cut or polished yet. and we allow our clients to invest with us in these parcels. We've done extremely well over the last several years in these type of investments, and these are the type of investments that we recommend to our clients, where you own the actual physical product, where you're not buying a piece of paper or something that could be manipulated on a whim. These are hard assets that you can hold in your hand. These are partnerships that we have with our clients that we allow to invest with us in these amazing pieces, and some of them are just off the charts, amazing diamonds you could not even believe exist in the market today. So we're very pleased to bring these programs to you. We do have some programs that will pay you a monthly income and will return over 25% a year. We have other programs that allow our clients to invest with us as partners, and the returns can be even higher. So if those are of interest to you, we would love to explain them to you and explain how you can become our partner in some of these amazing deals and see the type of returns that our other clients are realizing.
Featured Diamond of the Week from rarecoloreddiamonds.com. What a beauty it is. A 0.24 carat, round, brilliant cut, fancy, vivid yellow green. Take a look at it online. Featured Diamond of the Week from rarecoloreddiamonds.com. rarecoloreddiamonds.com, featured Diamond of the Week. If you would like to get the auction results, and these were from Sotheby's Magnificent Jewels and Noble Jewels, May 16, 2017, Geneva, Switzerland. We'll be happy to send them out to you, and obviously you get an idea of what's being auctioned off on a worldwide level from Christie's and Sotheby's at their major sales in Hong Kong, New York, also London, and Geneva, Switzerland. It's interesting to note that the 17th century French merchant and adventurer Jean-Baptiste Tavernier was among the first to be intrigued by fancy-colored diamonds. And it's interesting to note, in 1669, he sold the Tavernier blue diamond, also called the French blue, to King Louis. In the first half of the 17th century, he was the first who made a reference to pink diamonds. Moreover, in 1642, he mentioned a very large, rough pink diamond weighing over 200 carats, shown to him by moguls in the kingdom of Golconda. This diamond, named the Grand Table and valued at 600,000 rupees at the time, is still the largest pink diamond recorded to date. The French merchant also purchased two pale pink diamonds around 1668 and drew pictures of the stones in his travel book. Since the 17th century, the value of colored diamonds have increased considerably. Fancy colored diamonds are rarer than their near colorless counterparts, as their hues come from a disturbance during the formation process of the stone deep in the earth. For all colored diamonds except pinks, the color comes from trace elements that interfere during the formation of the crystal. A diamond is composed of pure carbon. It's in the intrusion of another atom that causes the color, nitrogen for yellows, boron for blues. Concerning pinks, the color is a consequence of we don't know what. They've looked into it, and they cannot figure out, and they've done a lot of studies on this, how a pink diamond is the color pink. Although other rare-colored diamonds, such as pinks and reds, are found in India, Brazil, and Australia, blue diamonds are primarily discovered from the Cullinan mine in South Africa. And Harold, one of the things we've talked about for quite some time is the Argyle mine in Western Australia that was started up about 25 years ago. It's going to be running out here in 2020. And the reason I brought up this story that we were able to track down on Sotheby's website is to see back in 1669, that really was where people became interested in and started to take a look at the colored market. So it has a long, long history. But if you are somebody who's looking to invest, and you know that 90 to 95% of the world's pink diamonds are from the Argyle mine, and that mine is going to be shutting down in about 2020, That obviously creates an opportunity for those that are willing to put risk capital forward and put the money out there, hold on to the diamonds for the long term, because 95% of the world's pink diamonds will be gone. And at that point, truly, we do not know where the prices will go. But I would imagine that if you hold on to it for the long term, Harold, there's a very good chance that you'll be very, very pleased with the results.
I don't see any way that we're not going to be. Again, it's economics 101. Pink diamonds are the most concentrated form of wealth on Earth. 95% of them are under a quarter carat, which is a very small diamond, but still worth a fortune. So the fact is that if the mine that produces 95% of these pink diamonds is going to close because they're not producing anymore, it only is logical that the price of these diamonds will increase in value substantially. Now, the mine is going to close within 3 years. So it's not that long of an investment. But you don't want to sell the diamonds the minute the mine closes. Let whatever diamonds, disappear off the market. And then we start to sell our diamonds back into the marketplace. You're talking about an asset that, again, is considered the most concentrated form of wealth on Earth. There's not going to be any more of them. They're absolutely stunning. The majority of them are under a quarter carat, so if you happen to get a diamond that's over a quarter carat, you have a diamond that's actually larger than most. I think that Argyle Pinks are one of the best investments you can make, and over the longer term, I think that we're going to make an awful lot of money for our clients on those. We built the auction site specifically to sell these diamonds down the road when it's time to sell our clients' diamonds. So we're easing into the auction market at this point. The auctions that we're running at this point are exciting. We sold 2 items that came to expiration, and both of them sold for good prices. So congratulations to the lucky buyer that ended up with 2 magnificent kilo silver coins. One was the Libertad and one was the Aztec calendar, and they both won for excellent prices, so congratulations. Please sign up for H. Siegel Fine Auctions. You're going to see some of the most amazing pieces coming up. Elizabeth Taylor's brooch is up there. There's a magnificent $400,000 yellow diamond up there that is ranked as one of the best yellow diamonds on Earth. And we are going to continue to add more and more to the site and keep this particular auction going at least till the end of the year. Also, pay attention to our private investments, one that's returning over 25% a year in U.S. dollars that pays monthly, and one that we allow you to partner with us in rough diamonds that we've been very fortunate to be able to acquire. So, again, where the world right now is extremely concerning as far as investments go. The stock market is extremely risky and it could fall at any time. Canadian real estate is plummeting, and that's where most people have most of their net worth in their home. There's very few investments out there. Interest rates are so low that nobody could ever retire off interest in the bank, and we have 2 private investments that will help our Canadian clients do extremely well if they want to retire. So please get in touch with me. I'll spend as much time with you as you need in order to explain how and why we're doing what we're doing.
Speak with Harold personally, privately. Call is free. Anything discussed confidential. RareColoredDiamonds.com. RareColoredDiamonds.com. 1-800-432-1022. Featured Diamond of the Week. A .24 carat round, brilliant cut, fancy, vivid yellow green. See it. RareColoredDiamonds.com. Featured Diamond of the Week. And we really encourage you to go to hsfineauctions.com right now. An auction is underway. It's very easy to sign up, and you can start bidding immediately on the items that you see. Harold, thank you for your knowledge, and once again, another great show.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold. Find out more about how you can be making money today. How do you invest today so you can retire tomorrow? Speak with Harold. 1-800-432-1022. RareColoredDiamonds.com, the website. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.